Good morning. Ira Epstein with your morning flash update for this Friday. And this is the 2nd of June. I'm looking for dates in my mind. 2nd of June already, 2023. And it's about 8:30 a.m. Central Time. So looking at a stock market, the never-ending bull market just keeps marching on. You're looking at a mixed picture in the metals. There's a lot of talk that in the copper market, China is about to do something in the property market to help Evergrande and to help Wanda Properties especially get away from the brinks of bankruptcy that they've been on. So that would be good for copper if they can find ways to get people into the market. And they're talking first and second home buyers as well. So that would be a very good part. In the grains, you started off lower. You've come roaring back in the bean market, fairly flat in the wheat. Corn is down 5. You're down in the bonds and the notes. I'll get to that in a moment here. And we are looking at the energy still strong. And again, it's interesting. The OPEC meeting's coming on. What's going to happen? Is there going to be more production cut? Are they going to just sit where they're at? It's interesting that how OPEC is taking control of what press members can come to this. And it has thrown out Reuters and I think it was CNBC and one other that they've done. It's sort of weird, but they're taking control of everything. That's what they want to do. All right, let's get to the monster in the room, the elephant. So here's your U.S. non-farm payroll. I feel vindicated. I kept saying, how do you get all these positive readings out of everything else that I'm seeing and possibly not going to have a good jobs number? Now, this is double almost what the market was looking for. It was looking for 190,000. I saw some numbers, 188 were the estimates. I thought if you get 235, 240, it's a big number. And that's what I was saying this morning. That would be big. I was not ready for 339,000. So you got to ask yourself, well, how did the unemployment rate go up? Because that's what the Fed wants to see. Well, it's obvious. More people are coming into the workforce. So those that stepped away during COVID, probably some retirees that stepped away, they're seeing that, hey, they need to get supplemental income or they got to go back to work. New college grads going to come into the workforce now. So you get all this, and that's what's making that up. To make matters even stronger on the labor market, you revised up the April number, which was a surprise to everybody at 253 to 294. As for the earnings, okay, so if we look at participation first, 62.6, the earnings went up 11 cents. The average hourly earnings expected to be up 0.3. They got just a shade more than that. And the hourly earnings, when you go to it, you can see in percentage points, they're saying it was up 4.3%. So month over month, year over year, that's the difference between the two in those. So what does this mean and why isn't the stock market falling? Let me give you my take on that. This is such a blowout number that it says that even those that expect the recession, it's going to be beyond the word mild. 65% as of last night, some of the surveys expect a recession. But when you get these numbers this strong, first off, I think the Fed has to go the quarter point. Where's their credibility if they don't? They're revising higher the last two numbers. In other words, this one's just a blowout number, and last month's was a big revision up. You're going to tell me that they're going to sit tight to see what? If it goes over 400,000 jobs? So I think the Fed goes. Does the market care? No. Why? It took me a while this morning. That's why I'm a little bit later. I think the market's just come to the conclusion there's so many people employed. There's so much money. The balance sheets, while some people are finding that they're hitting their credit cards and so on, new people coming into the market all the time, they're not that loaded up. The market can support, in other words, the companies that are out there supporting it. Then you get the AI boom, and it just keeps fueling itself. Now, the dollar's acting as I would assume. It broke hard yesterday. It's not recovering off this news. That's what I would assume. And I would look for some bids to come into the currencies. Look at the Aussie. That is the one that's on fire. The yen, as you know, I'm not buying the theory that the Bank of Japan's going to intervene so fast. They always threaten things like that. We'll see just what happens. So when you look at this, it's sort of a Goldilocks tale. You keep adding, interest rate hikes, in my opinion. You're going to go up again. That's my opinion. It doesn't mean I'm right on it. The market can absorb it, and it keeps climbing on that, and it's just saying, buddy, everybody's working. There's plenty of money here. So even if the Fed pushes you over the cliff a bit here, we can do it. Now, does this help those fragile banks? That's where the problem's going to come in. I'm not convinced it does in any manner, and I'd be staying away from that part of it. This is the kind of market today that one of the tools that I use is my pivot point series. I look to see when the markets get to extremes. And this is what a pivot point looks like. You get 5 lines. The center line's the pivot. Then you get the sale line 1 and 2, purchase lines 1 and 2, and I tie it together with momentum. So I created, and by the way, you have this in your charting software. If your charting software is any good at all, you have pivot points. You may not know how to work with them. Once you do, it gets exciting. And I tie stochastics, momentum to it, which is different than any one that I've seen. And it's a 3-part video series. It is for free. I want to show you how I teach in my other series, which aren't for free. So how do you get this? You go to our website under free offers, or you can just move right up here. There'll be an icon. Give that a click, and away you go. I will put out the weekly updates this weekend. I'll either do it today or tomorrow, so look for those to come out when we look at the weekly charts and get a full review. And obviously, as the day goes on, we'll see how many traders are buying into my theory. Do they think the Fed still goes? I'm at a confused point if the Fed doesn't raise interest rates. What are they waiting for? Jobs growth keeps going. What is the point of this? If you're going to slow it down, you got to go again. I'm Ira Epstein. You have a good day.